Hey, it's me, Fabio. I'm at the stonker. Oh, Fabio, you thought you could hide from me, boy? You thought you could hide your losses? It's time to clap those cheeks. Welcome back to Strongman Personal Finance. So Fabio asked me to make a video exposing his portfolio because there's a lot of clowns out there that do very stupid things. And one of the dumbest things they could do is have a cost basis of 98 in Meta. But in all seriousness, we all know Fabio's an individual stock picker. And all you guys out there, you just want to buy individual stocks and you want a 10x. And you want to have a cost basis of 98 in Meta. And it's so easy, bro, to beat the market. Well, this video, we're going to review his portfolio. And I'm going to give you some sage words of wisdom, okay? So here is Fabio's portfolio. Now, he's got like multiple portfolios. It hurts my brain to understand it. I'm stupid. I just buy like basically one thing, okay? That's all my brain can freaking handle. But this is apparently an aggregation of all of Fabio's investments. Now, we're going to talk about each one of these. Well, not really. We're going to talk about some of the big ones. So the first thing you look or the first thing you see is his allocation, okay? His real-time allocation. What are his top positions? Meta, 40% of his portfolio. And a big part of that was probably because of capital gains. Netflix, 6%. Alphabet, 7.3%. And Amazon, 6.9%. Then he's got all these other companies. Murphy, Salesforce, Dollar General. I mean, looking at all these, I don't see, like, any massive red flags here. I wouldn't call this a trash portfolio. I wouldn't call this a clown portfolio. But what I will say is I've been critical of large cap tech for a long, long time. I think a lot of people are buying large cap tech, number one, because it went up a lot, and number two, because they impute that past performance is going to continue in the future. Now, Fabio's scenario is a little bit different because he got a pretty good cost basis. Well, I would say he had a really good cost basis in Meta platforms. He took a very, I wouldn't call it a gamble. He took a basically balls deep approach to Meta when it kept dropping. And I actually agreed with investing in Meta. At that time, I saw the stock kept dropping and dropping and dropping. And I made multiple videos about it. I'm like, okay, this company, they're still massively profitable, even with these massive investments into the, the metaverse, which is kind of stupid. The stupid avatars they have. The company's, I don't get why the stock is dropping this much. So Fabio basically went all in. You can see he got not all in, but he got a pretty low cost basis. And it's now 40% of his portfolio. What happened with Meta was incredible, okay? My only criticism of him buying Meta is that the gains that he saw were partially luck. Now, some of you may be pissed about that. Oh, you're just jealous, blah, 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 blah. I'm not. I'm doing fine. I don't need to look at somebody's portfolio, see that they have really good returns, and then just be jealous. That's not how I operate. But the massive returns of Meta, basically year to date, that's almost like a once-in-a-lifetime thing. It is not often that you see a stock drop massively from all-time highs, all the way down to like, what, $89. And then it basically shot back up in a vertical line. Not vertical, but it shot up a lot in a very, very short time frame. Do I think he made a great investment in Meta? Absolutely. I think a 98 cost basis in this company with billions of users, that's highly profitable, that's making investments in the future, makes total sense to me. But the short-term returns were in part luck, which is fine, which is awesome. Like, I'm not mad. I'm not jealous. Oh, he made so much money. Good for him. I'm happy for him. But you cannot assume that when another stock like this drops, that you're going to get these insane returns. That is the first danger of trying to copy a portfolio like this. He took a very concentrated bet, and it worked out for him. It also could have not worked out. Now, I think Meta was a good investment. Got nothing against it. Nothing against it at all. But it could have potentially not worked out either. And when you take such massive concentrated bets, there is the risk that you could be wrong. Now, if you like Meta, guess what? It's one of the top holdings of VTI. it's even more represented in VOO. You get exposure to Meta and Netflix and Alphabet and Amazon, probably not so much Murphy, but you get exposure to all of these, and these are some of the largest represented stocks in the index. I feel zero temptation to put a lot of money in Meta. I think I'm like $500 in there for fun. But I feel zero temptation to go all in Meta. Because at this point in my life, with the wealth that I've accumulated, I don't want to take risks like this. Now, Fabio's younger than me. That's fine. And this worked out for him. That's great. The only thing I'm concerned about with Fabio is he had this return. He bought Meta, went up in a vertical line, basically. There's the risk for him that he's going to want to pursue this again. Because if you think about it, the insane returns that he got in a very short time frame, if he does that again, he might be a multi-millionaire. He might be able to retire. And that's where the danger comes in, is when you have a massive home run like this, which it was a home run, insane home run. You get tempted to almost do it again. I've even heard him say this, like, oh, I just need one more Meta or one more 2023, 2022, whatever it was. And then, I'm set for life. Granted, that's true. But you got to be careful that you don't take an extreme risk and expect something like Meta to happen again. That was a very, very rare opportunity. But the returns are insane, and you can't take that away from him. So, overall, I don't have much to say about his portfolio. It's hyper-concentrated. I think he's holding a lot of Meta because if he sells it, he's going to pay taxes, which that's one of the crappy parts about buying in a taxable account. That's why you should have all your money in a freaking tax advantage account that you don't need until retirement. Because then you don't run into these sticky situations where you buy stock in vertical lines, it goes up 200%, it basically triples. And then you're like, oh crap, I made so much money, but I can't sell it because it'll massively increase my taxable income. It's a very bad situation to be in, but he is younger and he hasn't had a lot of time to put a lot of money into a tax advantage account, which that takes time to build up those accounts. Okay. So overall, his returns, his unrealized gain is 118%, which is pretty good. Now we look at like my historical returns, right? So this is me investing since 2012. His returns are higher than my returns by leaps and bounds. He's done extremely well in the last couple of years. But think about what I have done to get these returns. I basically doubled my money since I started investing. What have I had to do to get these returns? Nothing. Okay, I put $4,000 into my traditional. It's now $14,000, and I put $59,000 into my Roth, and it's now $121,000 since 2012. The contributions got bigger as time went on. When I first started investing, it wasn't as much, but I literally had to do absolutely nothing whatsoever to double my money. Nothing. And I don't have to worry about taxes. I don't have to worry about any of that crap here. Okay. So yes, his returns are better than mine. That's fine. He took more risk. But the returns that I got for the risk that I took, which in my opinion, over the long run, you're really not taking that much risk if you have a 20, 30, 40-year time horizon. I think you'd almost say risk-adjusted returns, I don't know what the academic term is, are probably just as good in the long run, okay? But I'm not going to deny, his returns are trash and mine are better. Obviously he's outperforming, and that's fine. That doesn't bother me because I would never do something like this. If I was to buy Meta, it'd be like $500 or $1,000 or something like that. But that's good. So we go and look at his portfolio visualizer. Obviously he's massively in Meta. I'm sure he's going to trim that at some point, take some profits. But my advice to him is like, maybe you should take some profits by putting into the S&P or whatever index you want to buy. Do you really have to stay all individual stocks? When you look at the portfolio, it's like, how do you manage this? That is an honest question. How do you manage this portfolio? This is a lot of companies here. A lot of freaking companies. And some have done extremely well. He suffered some losses. That's just part of the nature of a portfolio. Now, if you exclude the big win in Meta, his performance probably would have been a lot lower. And for all the time that he's put into this, is it really worth the effort? For him, he's got the time. I guess at his last job, he did this more. And he was able to do a lot more research. I can 100% guarantee you, I don't have the freaking time, especially with 2 kids, to research all these companies and to keep track of them. I can't do it. It's too much. And I think the vast majority of people, especially as you get older and you get married and you have kids, you're not able to do and manage a portfolio like this. Now, the only other thing that I noticed is that he seems to do a lot of trading, which, is fine. He's having fun. He's got the vast majority of his money, it looks like, or at least I can guess, in, longer term investments. I really don't have any problems with, anything on here necessarily besides the time sink and complexity. What concerns me more is if you're following Fabio, look at how much he's traded, okay? He's, bought Bank of America, made 91%. What is this, Wells Fargo? He made some money here. He had some losses here. What is this, Gazprom? He lost 100% here. He's had some pretty good wins and pretty good losses. But when you're following him, you can't just be like, he bought Bank of America, and I'm going to buy it too. And then he sells it in 2021, and then, 3 months after he sells it, Bank of America crashes, and you get butthurt because you didn't know that he sold it, okay? He does a lot of trading, which is, that's his prerogative, and that's what he can do, and there's nothing wrong with that. But, once again, you can't follow this, because, you see these linked YouTube videos right here, right? What if you had bought this? What if you had listened to this video and said, oh, Fabio's such a smart guy? Not knowing that, maybe this was just a I love the thumbnail, by the way. Maybe you didn't know it was just a speculative fun bet for him, but then you see him buy it and you hear it in a video and then you get absolutely shellacked. That could possibly happen, okay? So you got to keep in mind, you can't copy this guy's portfolio. You can listen to his thesis on certain stocks. You can make your own decision. Obviously, he's had some successes. He's done very well in some stocks. But you can't be like, oh, I'm just going to buy whatever Fabio buys. You're going to get your ass clapped if that's what happens to you. So overall, this is not something I would personally do. Yeah, my returns are lower, but I don't care. I'm doing fine. I don't need to, buy and sell and trade and, take massive bets in meta. And I don't think a lot of people should either. So that's my overall thoughts. I don't know what else to say. He's Italian. He stinks. Well, that's it. Fabio's been destroyed. Good job on meta. I can't really fault you for that. I'm a bussy. I would never have taken that much of a concentrated bet, but scooping up meta in the 90s and 80s probably wasn't the worst decision. I would just say overall that massive return that you see year over year, it was a good investment. People are going to get mad that I said this. It was a good investment, and I believe long run he would get very good returns, and he did. But the massive price appreciation, there was an element of luck in that, an element of skill and an element of luck. So keep that in mind. Every time you buy stock, it's not going to vertical line like meta. You got to keep that in mind when you're doing investments. But overall, he's done pretty well. He's done better than me. That's fine. I'm just a loser, I guess. And yeah, that's kind of it. Cheers!